Guys, welcome back. Apologies for the delay. I just had a session. I was just rounding up, looking through some market structure stuff. But let's get into the price action. Let's see what Bitcoin has been up to. Now, Bitcoin has done some serious things today, some serious moves. But first of all, just a quick plug. So we've got Bootcamp coming up last Sunday of each month. If you do want to get involved with that, feel free to book your seat on the website. And it's basically a group Zoom call where we go over market structure, liquidity, price action, and all of that good stuff. So check out the link in the bio if you want to have some access to that. Let's see what Bitcoin has been up to now. Bitcoin has done some very interesting things, and we're going to talk about the recent price action, and we're going to just break down where we were and where we are right now. So as we were saying, we talked about Bitcoin yesterday, didn't we? We said Bitcoin was kind of in a weird position in the sense that we had this original range, we broke down from the range, yet not a convincing break. We rallied back into the zone, a pullback into the zone. Usually we expect a continuation after a pullback into the zone. But we were considering the idea of a potential rotation of PO3, the power of 3 player, whereby we have accumulation, manipulation, and then expansion up. We said the reason we could potentially expand up is this nice, beautiful curve liquidity, which could potentially get run. And we also said, well, what better place to start that real bearish move than to have a secondary test of that all-time high at 74,000. And then, we zoomed in to our price action and we said, right, Bitcoin is in this level. This is the 1 hour I'm looking at. And, we have this nice rally up and we have this curved price action here. And we said, usually when we get curved price action like this, because we've got these fair value gaps, we've got reason to break down. Okay, but we had this curved action and then Bitcoin stopped here. Why did Bitcoin stop there? What's the reason? Well, price doesn't just do random things. There's always a reason why price stops where it stops. Okay, and usually the reason is to do with the level of supply and demand in the market. So one of the things I didn't mention yesterday was the reason price stopped here. Now the exact reason why price stopped here can be found on the 1 hour. If we look at the 1 hour structure on the way down, the structure looks like this. Lower low, lower high. We'll have this in red because it's bearish. Lower low, SFP of that low, continuation downwards. Okay, and then we have a lower high, lower low, and then we have a tiny mini break. But I'm sure if we look on a 2 hour, that's not really a break. Okay, so I'm going to count that as I'm going to mark it in regardless. So we have a lower high, a lower low all the way down here, but this is a quite aggressive flush down. Okay, this is a sign that the bears are stepping in. We're having lots of supply into the market. We're distributing price down. We create another lower high and then we come down to that penultimate flush. Now, when we have huge, massive moves like this, this is an indication that we've got high volume players in the market. What does that mean? We've got big money, smart money. We've got high volume players in the market, whether it's individuals, whether it's computer models. We've got an influx into the market. And usually these are good zones to look for your supply and your demand. Well, in this case, supply, because it was a flush down. And what happened? We created that lower high, lower low, lower high. And guess what happened, guys? Well, look, in that initial flush down, price respected it. Now, in this second flush down, we create what is known as a breaker block. So technically, it's known as a breaker block. Now, what is a breaker block? Well, breaker block is where we have, as we can see, this single bar of supply over here on the 1 hour. If you zoom in, you can see it. Now, if you want to understand how to identify all these things systematically without error, this is what the bootcamp is for. Again, this is what the one-on-one sessions is for. Now, at the moment, I was assisting someone with market structure, just understanding how to read market structure. So again, if you do want to understand how I see the charts and how I read the price action, feel free to get in touch. Best place to get in touch is probably Discord, or you can go straight to the website and you can book your seat. So what we've got here is a single bar supply. Okay, what does that look like? Well, we've got bull trend bar number 1, bull trend bar number 2, bull trend bar number 3, bull trend bar number 4, followed by an aggressive bear trend bar. You don't want that. An aggressive bear trend bar. Not only do we have an aggressive bear trend bar, we have an aggressive bear trend bar with imbalance. Okay, and that imbalance is over here. All right, and if we zoom in, we can potentially see that better. All right. So hence why this becomes our zone. Let's see if it's apparent on the 2 hour as well. Okay, so not so much on the 2 hour. Well, we use the bar replay tool so that we can pause price where we want to pause it. Let's look at the 1 hour. Well, it's kind of on a 1 hour. And let's look at the 45 minute. Well, it's kind of. Let's take a closer look. Well, it's disappeared on the 45 minute. But on the 1 hour, we've got our supply zone. All right, this being our 1 hour supply. So what do? You extend that to the end. All right, and not only was this our supply zone, all right, this was a failed supply zone because price rallied down. We expect price to react off this zone for a continuation, don't we? But what did price do? Instead, price created a flush through, a very aggressive flush through. Okay, and we only had 1-2 bars within that zone. Usually you only want to see about one, but in this case we saw 2, which is still fine. And the principle stands. In trading, you're not going to get everything completely perfect, textbook drawing, exactly how you read it in a textbook or you saw it on a video. You kind of have to go with the flow sometimes, and if something is close to being perfect, go for it. So what we've got here is what we call a breaker block. And a breaker block, for those of you who are new to trading, you can think of it as kind of like supply and resistance. With supply and resistance, usually you have your supply and resistance. You have your supply and resistance channels. And what do we usually say? We say usually when we break supply, not supply and resistance, support and resistance. When we break resistance, it now acts as support. Okay, so we break resistance, it now acts as support. And that's essentially what a breaker block is. Instead, a breaker block is like a zone. All right, and it's a zone, and this is the zone that was initially meant to be our resistance. This was meant to be our resistance. So when we break above resistance, guess what? It now acts as support. And that is exactly why we got a reaction from that zone. Now, this is not something I mentioned yesterday, because yesterday I kind of, I'll be honest, I kind of rushed the stream yesterday, all right, because, I didn't really see the market as something that was, proposing lots of opportunities. So I figured I'll just give you guys an overview and then, we get moving. Well, what we've got here is the reason why we got a reaction. Now, could we have entered based on that reaction? And not many people would have seen this, honestly, and if you didn't see it, don't beat yourself up. But we definitely could have entered off of that. Because why? Let's look at what the price action is doing. It's creating lower lows and lower highs. It comes down, creates a lower low, creates a lower high, creates another lower low. So as of that moment, where are we expecting to break before we can get involved into this trade? We're expecting that last lower high to be broken, which is coming in at around 61.8. We do break that, we break it bullishly, we get an immediate retracement there for that continuation. All right, so you could have entered a trade right around there. Did we get a pullback to zone? Not necessarily. So if you didn't enter on the break or that pullback, you weren't catching that one, and that's fine. That's fine. Now, if you want to get into these trades earlier, and you don't want to wait for market structure to give you the confirmation, you've always got your indicators to use. There are plenty indicators you can use out there. You've got your MACD, you've got your RSI, you've got your market cipher, which I think is the best indicator in the world. All right, and you've got moving averages. You've got so many other ways to enter if you don't want to rely on market structure. And let's look at what market cipher is doing. Usually I used to talk about market cipher a lot, but I've kind of reduced that now because I really want to get you guys to understand that you can fully trade without any indicators. You can trade purely based on the market principles alone. What do I mean by that? Market structure, supply and demand, liquidity, order flow. All right, you don't need indicators to trade, but it can help, because what did Market Cipher do here? Market Cipher told me, said, hey TJ, there's about to be a change in direction here. And how is that? And why is that the case? It's because we got a nice bullish divergence, as we can see here, as price rallied down, printing successive lower lows. Market Cipher, especially the momentum oscillator, was printing higher highs. Okay, so this is what we call a bullish divergence. It's an indication that price is about to change. So how beautiful is it when price is already telling you price is about to change, and then you get the market structure change? That's double confirmation, and that is enough to enter your trading with lots of confidence. Yeah, so in YouTube a few days ago, someone commented on my video saying, they're stuck. They're stuck as far as how to enter trades. They can read the price action well, but they can't quite enter trades. Well, it's very basic. Entering trades, it's purely based off of market structure. And if you do want to get really, really, really precise, you can use indicators. But anyways, we could have entered that trade, and that's why price reacted off that zone. Now, could we have caught this trade here? Now, as you can see on my chart, I've got these levels, and these are levels that I actually I sketched out this morning at around 10 o'clock. Around 10 o'clock, I sketched out these levels because a friend of mine, asked me. He says, "All right, TJ, what levels are you looking at today?" So I did sketch these levels, but I didn't post this. I didn't post this because, first of all, I just didn't have time. I've just been working tirelessly. I've had sessions after sessions, and one-to-ones, group calls. So I didn't really have time to post this. But could we have entered this trade based on the principles we preach here and the principles we learn here every single day? 100%. 100,000%. And let's see how that would have transpired. Could we have caught this short, this crazy short trade that we are seeing right now? Now, did I enter the trade? Did I catch this? No, I didn't, because today was busy. I didn't, and that's fine. That is completely fine. That was almost a 5% move, which crazy move. I wish I caught that one, but I didn't. So we did sketch this out, and as I think it was around 10, probably around 10, 11. So let's see if that marries up with the price action at the time. Yeah, it does. So around 10, 11 o'clock, we were here, all right? And this is my thought process. My thought process was, cool, we've broken bullishly. So we have broken bullishly, so we've got this old demand zone we could potentially return to. We can treat this whole leg, as one flush up, because on a higher time frame, I'm sure it is one flush up. So if we look at the 45 minute, yes, so on a 45 minute, we have one straight flush up from this low, from this low up to that high. It's one flush. Okay, so based on that, I was saying, right, let me look for where we've got sticking points. Let me look for where have I got supply zones or demand zones. Most likely demand zones, because I'm looking to enter that long. All right, where am I looking to get that next retracement? Hence why I said, cool, well, we've got this 24-minute zone here. We've got this 15-minute zone here. Now, following that, I said, oh, well, we've also got this established distribution model up here. And obviously, price has to distribute in order to rally down, right? Price has to accumulate in order to rally up, right? So our distribution model is a very clear indication that we could potentially be looking for a rally down. Of course, we can get distribution models that continue up, and in that case, we call them reaccumulations. But here we've got our distribution model, which is essentially a range, which is essentially a base structure that's going to, cause price to drop at some point. It doesn't always happen, but more often than not, it will happen. All right, and all of this is based off of Wyckoff. It's based off of obviously the Trinity model we talk about. It's based off of so many things that you need to be aware of before you start trading. All right, as I say here over and over again, there is so much to learn before you actually become profitable as a trader. Trading is one of the professions whereby it's so simple. It's so simple to click buy and sell. Now, what other thing in this universe can you think of that, all you need to do to execute it is just to click a button, buy and sell. That's it. Now, because of that, it makes it one of the most hardest things to master, because lots of new traders come in thinking, oh, I bought, I made $10,000. That's great. This is easy. Oh, I bought again. I made $20,000. Oh, this is easy. This is easy. And because of that, they don't give it the respect it requires, and they don't put in the work to actually develop as a trader. So the fact it's so easy to execute orders, I think it's a blessing and a curse. All right. So traders are constantly learning. They're always learning and improving and refining their skill and their strategy. So you should be doing the same. So let's see what we've got here. So we have this distribution model, all right? And, I've said this over and over again. So I'm pretty sure, for those of you following me, who follow me religiously here, you know exactly what I'm about to say. What am I about to say? Well, I'm about to say it's the same thing. The market does the same thing over and over again. We've got our range high, we've got our range low, therefore we've got our created range, all right? What are we expecting after a range creation? We're expecting a range model 1 or potentially a range model 2. All right. Now, these models are models I give away in my one-to-one sessions. All right. Now, range model 1 is a sweep. I'm going to give it away here. It's a sweep. It's simply a sweep of your prior high. It's a second entry model. So what am I thinking then? I'm thinking, well, if price does manage to conjure up the strength to rally up back to this level, I'm expecting a reaction off this level. If that reaction is confluent with market cipher bearish divergence, why will I not enter that trade? If that reaction is confluent with a bearish change in market structure in a smaller time frame, why would I not enter that trade? So that's exactly what I was thinking when I drew this initial setup. And also we had this 24-minute zone. So I was thinking, well, could price come up, sweep that range low, sweep that level, and then follow on? The reason I was thinking that is because this is something that's happened not too long ago with, I think it was gold. I think I gave out a gold. Was it gold? Let me just check quickly. Was it gold? Maybe it was Euro USD. I gave out a Euro USD signal. Oh, there it is. Yeah. Not the tidiest, right? But I'll make sense of it quickly. So look, so we had our range. This being our range, all right? This being our range, and then I was looking at this level saying, well, we've got this supply zone, this demand zone underneath, and is there a chance that price simply comes and sweeps it, okay, and gets that reaction up? And that's exactly what happened with Euro USD. Okay, anyways, back to Bitcoin, because we're talking about Bitcoin. All right, so therefore, what was I looking for then? Okay, so therefore, what was I looking for? I was looking for a sweep of that prior high. Did we get that sweep? Let's just click the replay tool back. Yes, we did. So let's look at price action. At this stage, I'm going to go on the 5 minute to see what price does as we come to our zone. Well, as we come into our zone, price is creating higher highs and higher lows as we expect. Successive higher highs and higher lows. Bang! It swept that level. Okay, it swept that level. Let's go on a 3 minute. We can probably see it clearer. It swept that level, but has it swept it with our confirmation? Because we can't just enter based off of a sweep. But what's our confirmation? Well, let's see. Do we have a divergence in market structure, in market cipher? We've got highs on that side of things, and on this side of things, do we have lows? Yes, we do. That is trending downwards. Okay, that is sloping downwards. All right, so that's called a bearish divergence. But we don't just want a bearish divergence. We want market structure to tell us what's going on. Is market structure going to give us that confirmation? Well, not at the moment, because we just have one sweep up. We have to take out this low before we can enter anything. So we go on a 2 minute. On the 2 minute, do we have any clear structure? No, we don't. On the 1 minute, do we have any clear structure? Yes and no. So your 1 minute structure would have been here. So this would have been the level you needed to break on the 1 minute before you could have justified that trade. And this is on the 1 minute. So I'll be honest, this trade, it didn't give us the best confirmation as far as market structure goes. But let's see how it played out. We could have waited at least for that level to break. And as soon as that level breaks, what are we looking for? We're looking for a retracement. All right. So it kind of broke. Has it broken yet? Not yet. It's not broken yet. It starts to distribute. Okay, so now it's broken. And as it breaks, what does it do? It comes back into our zone to retest that zone. It could potentially come higher, or it could flush down now. All right, so that is your indication to enter that trade. And after that, the rest is history. The rest is history, and then we get that flush down. So that would have been a nice trade. You may not have been able to enter that trade based off of market structure until you got to the middle of the range, which is not the best as far as risk to reward goes. All right, not the best. But if you entered based off of market cipher, I lied. What do you mean it's not the best? As far as risk to reward goes, well, we've got 6R. So if you risk $1,000, you just made $6,000. All right, which is decent. That's decent for a 7-hour move. Not bad. All right. So that's how that trade occurred, and that's what happened, and that's what transpired in the market today. So if you are looking to learn more about trading and learn about this technique of trading, feel free to sign up to the bootcamp, and feel free to hit me up on Discord, and I'll be able to assist you. So what are we doing now? What's going on? What do our next trades look like? Well, I think our next trades are still the same as what they were yesterday. I'm going to be patient. Now, I'm not going to force it. It's the weekend. I'm going to wait for this low to be swept, or potentially this low as well. All right. Okay. And I'm going to look for that high to be swept. So our levels remain the same as yesterday. All this internal play, that's fine. It can do what it's doing. That's fine. I'm looking for the big boys. All right. When I get that, I'm going to be inside. Okay. Now, if I have time over the weekend, perhaps I'm going to break down some of the more internal structure and give you some internal scalps. But for now, I'm waiting for these big levels. All right. Yeah. So if you found this information useful, don't forget to hit that boost button, hit the follow button. We're looking to get to 1,000 followers, and as soon as we get to 1,000 followers, I'm going to be giving $1,000 to someone on the channel. So hit that follow button, and I will see you on Monday.